Monday, June 15th, 2020, Maneco 64, home of alternative economics and contrarian views. So the stock market is tumbling again. The Dow futures is down about 1,000 points. It has been down more than 1,000 points. I think the powers that be are bringing us not only the second wave, but also the second leg of the collapse of the everything bubble. As I've said before, months ago already, this is what I think about this crisis. You need to read this to understand what's going on. Back in the 70s, they used this crisis to bring in the petrodollar system. The other book I think people should read to understand the bigger picture of what's really going on in the world is this one here. It's a classic, Pawns in the Game by William Guy Carr. I think it was written in the 50s or thereabouts. And William Guy Carr explains exactly what's going on in terms of the bigger picture throughout the centuries. And I think we're coming to his maybe fourth or third world revolutionary movement, and that will bring about the fall of the United States. Really need to read this to understand, in my opinion, what's going on. So there are headlines out there today. For example, the Financial Times says the latest CV19 latest Beijing resurgence threatens China economic recovery. So we know where this crisis started, right? It abated over in Asia, in China, and then it came to Europe. Now it's picking up again over there. All I can say, second wave. Do I believe in it? The way it's being reported, of course not. But be as it may, it's going to have big consequences, again, in my opinion, for the economies around the world, especially in North America, Western Europe, including the UK, of course. We are the countries that are the most indebted. And I think this is what it's all about. It's a cover for a major demolition of our economies, a major reset. We've even been told by the heads of the World Economic Forum, by Dr. Klaus Schwab, the man who hobnobs every year with the most important business, media, political people in the world. He's told us that this is a great opportunity to start his fourth industrial revolution. And he had support from Prince Charles of the UK, and I'm sure support from others. And this is what it's all about. Of course, they can't bring this plan without a crisis. And that's why Rahm Emanuel said, you never let a good crisis go to waste. I think they're killing a flock of birds with one stone in this crisis. It's amazing. So the other thing for the UK, I would say, today is the day where non-essential shops are supposed to start opening again. But right on cue, we're getting this talk of second wave. We're getting the stock markets tumble quite badly. Started a little bit last week already. We saw almost a 2,000 point drop in the Dow. It recovered quite a bit the day after. It's going to make people scared here, especially in the UK. And the furlough as well, that's going to turn into even more unemployment. And I think the economy is nowhere near the bottom here in the UK. I know we had really bad numbers for April. It might pick up a little bit again in May and June, but I think in the medium to long term, we're nowhere near. So I continue to expect a lot of mayhem in the financial markets, and that's why I think people need to be out of the system, especially now. They need to be in precious metals, gold and silver, physical gold and silver. Yeah, you can play a little bit the markets if you want, but be aware that your money is at risk, not only from the movement in the markets, but also from counterparty risk with the brokerages, with the banks that the brokerages use to put their money or your money with, because brokerages are not banks. So they have to have a bank account with one of these banks. So before I look at the markets, I just wanted to show you what I wrote on March 26. I did a video, the Dow in 1929 versus the Dow in 2020. I did a part one in March, did a part two in April, and I guess today is a little bit like a part three, but I'm not going to call it that. So this is what I showed back then in March or in March 26. We had bottom in the Dow on March 23rd, and we picked up quite strongly thereafter. I thought it was a bottom. I wasn't sure. I'm not saying I call bottoms and tops perfectly. This time it kind of worked. And I compared it to 1929. So you can see there 1929 on top, and then not 2020 in the bottom. I went on to say Dow took 10 weeks from September all-time high of 386.10 in 1929 to November 1929 low of 195.30. Correction was 49.41%. Dow rebounded just over 50% from low in November to around 297 in mid-April 1930. So it was roughly 22 weeks. And then I looked at the drop we've had in 2020. And I know the Dow took about 6 weeks to correct from all-time high of 29,568.87 on February 12th, 2020 to a low of 18,213.65, or a correction of 38.4%. A rebound from this low of around 50% would take the Dow to near 24,000. So that's where I thought the Dow might go, just above 24,000. Of course, it went up a lot more, a few thousand points more. But the important part, I think, is the cycle here. I said this move higher could last about 13 weeks, which corresponds to roughly 2/3 of the 22-week move in 1929. So the reason I did that was because the crash took 6 weeks in 2020. In 1929, it took 10 weeks, so 2/3. And I came to 13 weeks. What else did I say about the Dow in 29 and 2020? Well, you can pause the video. I'm not going to read through this, but I said I expect the bottom in the stock market to be in 2021. And what do I mean by bottom? Maybe the final bottom from the top in February this year. 2021, last quarter of 2021. So that's where we are. There are some people who are calling for the Dow to go back down to 5,000. I'm not too sure. I'm going to try to not guess the level, but more the timing or the cycle. In this analysis, I guess 9,000, but we'll have to see. I might be wrong on the downside. It might be even more lower, as I was wrong on the upside this time of the rebound that we've had. So let's look at the markets this morning, see what they're doing. It's 8:09 a.m. London time. We've got the Dow future down right now 950 points or 3.7%. We're at 24,640. And I'm just going to show you the chart of the Dow future. And I've written down, as you can see, the number of weeks since the bottom on March 23rd. This is a weekly chart. So we're now on week 13. And it seems to be working like a charm, that analysis. I could be wrong, but the other thing that I would say, 13 is an important number for the markets. Why is that? Well, because it's part of the Fibonacci sequence of numbers. Here's the Fibonacci sequence, as you can see. And I remember many times in the markets talking to colleagues how we used to always notice that trends used to end on the 13th day or the 13th week or the 13th month. Don't ask me why. It's part of nature. And that's what people need to understand. Yeah, markets can be manipulated like they were recently. They might go up more than they probably should because all the central banking intervention and fiscal intervention. But when it comes to time, it's very difficult to stop the markets. And that's what I think we're seeing right now. So that's the Dow. Let's look at precious metals. I made a live stream yesterday, my usual Sunday live stream, telling people they need to be less concerned about the price of the precious metals in fiat currency, in dollars, pounds, or euros, or whatever. They need to be more concerned as holding it as insurance outside the system. Think of your holdings as ounces of gold or ounces of silver. If you're really wealthy, you could think of tons, I guess, as well, or kilos if you're in Europe. A lot of people in Europe think in kilos. Anyway, gold right now is down about $10, but it's still at 17.20.50. I'm not concerned. It's down just over 0.5%, while the stock market is down 3.5%. So you tell me which one's doing better. Do you really want to be in the Federal Reserve note? Do you want to be financing the banks? Because that's what you're doing when you're holding this Federal Reserve note, what's so-called cash in the bank. I don't. I know where I want my wealth to be. So the high overnight has been 1736 actually, and we're right near the lows here. I expect gold and silver to do well this time around. Actually, I know we're down here today, but I don't think it will last that long. Spot silver is down 2% at 1711. So we've seen the gold silver ratio go back up above 100 right now, slightly. The S&P future is down almost 100 points. We're back below 3,000. We're at 29.48. NASDAQ 100 future is down 2.4% at 94.26. Currencies, sterling, as I said, sterling always suffers when the markets are lower or when there's volatility. Sterling is down 0.6% at 124.60. The euro is down 0.2 at 112.34. And the dollar is down 0.1 versus the yen at 107.25. What about crude oil? That's another indicator of how things are. Well, crude oil, not surprisingly, is down 4.5%. WTI at 34.76. And the bond market as well. Yields are down. 10-year yield is now at 0.66 basis points, or down 4 basis points on the day. So there you go. Be careful out there with the markets, I would say. Try to have your insurance, precious metals, physical, preferably outside the system. What about the mining stocks? Yes, they could get hit temporarily, but I'm not concerned. I think eventually they will do well in spite of what's happening in the general stock market. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great beginning of the week. Take care. Bye.